And thank you very much for joining us.
Thank you.
I'm really looking forward to the session. I'm a layman when it comes to payments.
No, you're
And
not.
yeah, I am. I'm kind of a layman. My background has been in trade and it's been in lending. And payments always seems to me the sexy. I've heard the term the sexy, the most popular thing to pay attention to is what payments. And I'm gonna do this session as if I am the layman and you're the experts because you are. And it's great to have this geographic representation from all the way from Asia, from Europe, and from the United States. But I want to set this up just by two stories. It's 2008, and it's the financial crisis, and I'm in Dublin, Ireland, and I'm visiting a bank, and I'm in a taxi, and the taxi driver tells me he's been excluded from the banking system. He used to have a bank account, he can't have one anymore, when that was kind of going on in Ireland. And he said, but that doesn't matter. I have a card. This card is everything. This is my bank now. And he got it from the post office, right? And so he'd get paid and he'd put everything on his card, and I pay everything just this is what I use. I use this card. It was just fascinating to me to see this individual that was taken out of the system, but there was a solution. Okay, that's one. Then the second story is kind of important to me. I have some connections to Venezuela, and I used to live there, and I have a lot of Venezuelan friends. And just 3 years ago, life was pretty difficult down there. People didn't have the supply chain was broken. They couldn't get food. They lost, I think the average person lost 15 pounds. Just imagine losing 15 pounds, how hard that would be anyway, but losing 15 pounds, but it was a real challenge. And they had no access to dollars. That was really the principle, right? No access to dollars. So what's happened in Venezuela over the last year? Well, they have access to dollars. How'd they get dollars? It wasn't a government initiative. It wasn't like Ecuador converting from their currency to dollars. It didn't start from the government. It was individuals that found a way around it, right? They have a mobile device, and they're using, they say Zelle, using Zelle to make payments. So person to person, instead of having those bolivars, all of a sudden, okay, Dave, boop, boop, we both have an account.
Yep.
Next thing you know, the supermarket's taking it. Boop, 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 boop. Then all of a sudden, this society's been dollarized. It didn't happen through government, but it happened through innovation, and it's fast. And now, Venezuela's in a better space in terms of access to things that's important to them. So I see that, and it's like, wow, the power of this power. And so maybe I'll call it this global payment movement that's been happening in the last 15 years or so. So my first question is this. This is a setup. What are those key catalyst drivers that really made this movement, has really been the catalyst for this movement? Is it consumer demand that says, like the stories I mentioned, is it consumer demand? Is it corporates expecting a certain delivery? Is it the banking sector, because all of our investment innovation has led that? Is it big tech and fintech and the non-bank with their technologies? Or is it governments? Governments that simply say, hey, we expect payments to be this way, not the way you were doing it. Okay? How's that? Or is it none of that? And I don't know. Is it none of that? I'll start with you, Dave.
Well, I think that the examples that you gave are obviously out of the remit of what we do in transaction banking, but we'll take a shot at it anyway. I think the examples that you gave have to do with technology providing access, cross-border access to accounts. And I think that's a short answer, right? So you've got a phone, you hook to the Wi-Fi hooks to the internet, and away you go. And if somebody's willing to onboard you as a client, it doesn't have to be in your home country. I think that's your Zelle story, for example. Within that, so that's my short answer, which obviously Bruno or Shirish are welcome to contradict or amplify upon. Within that, of course, is the challenge of KYC wherever you are, right? So you're a U.S. bank, you get an inquiry from somebody in a foreign country, they want to open an account, that you've got something to deal with. So I think that the short answer is technology makes borders not irrelevant at all, but certainly easier to cross. What do you think?
I think to your other part of the answer, what's driving this change, right?
Yeah.
What Dave said, I definitely echo. I think all of the above is the right answer. The governments are driving change. Technology availability, access to cheap computing power is driving the change. To set up a bank, you don't need traditional large dollars that you used to need to set up a bank. You can set up a bank by spinning up a server on AWS. That was it takes to set up a bank, by the way. So technology is making the change. Governments, as already said, because they want things to be inclusive, get people inside the banking system, provide economic support across the world, pay aid, even that much, they need people to have an account or forms of account. Competition, fintechs are making the change because they're going sharp after a few things that we in the banking system probably have ignored or allowed to not evolve or just stay as they are. And fintechs go after the needs that are unmet or create needs that we never felt they were before. Nobody wanted a touch phone before, right? You didn't want a touch phone, but now that the touch phones are available, everybody wants it. So stuff like that, right? So now that you get instant payments, everybody wants it, whether you really have any use for it or not. So everything has driven the change, and that is why probably you'll find a lot of all three of us will echo each other throughout the conversation, because I believe that because of the multiple facet of change drivers and all of us in the same place, payments becomes the most collaborative problem to solve of our times. You will find a lot of us talking about the same thing, and we are from different geographies. So while we have a different banks and different client sets, we all, coagulate very well around problems and payments.
Yeah. And Bruno, let's introduce you here. Can everybody?
Yeah.
Oh, there you go, over here.
Can you hear me?
Bruno.
Can you hear me well? Okay.
Loud
Yeah,
and
we
clear,
can hear
Bruno.
Yeah, great. So what I would just compliment my colleagues, I think payments is a very complex topic. That's why I love it. But if I could try to make the complexity a bit split in a way that I can understand, that people can understand, is I think when we talk payments, there's always the unit of account where I put my money. And historically, it has been banks. And in Europe, I mentioned you have three bank accounts per inhabitant, where in Latin America, you have one account for every 3 inhabitants. So each region is different in terms of how many bank accounts you have. And now what has changed is you have wallets, you may have tokens that are units of account, and that is changing the world of payments on the way that people hold accounts. Where Shirish and Dave and we all contribute is on the payment rails. And payment rails is what's behind all those accounts. And those payment rails, they had not really innovated in the past few years. Only maybe 5-6 years ago, we started innovating those. There's a strong investments happening, but those rails have to be as wide and as cross-border and as industrial as possible. And that's a different sort of payments. This is the delivery of funds from one place to another. And the last part, which they've mentioned, and what you mentioned in the case of Venezuela, is at the end, these payments have countries, have regulations in those countries, have security concerns, fraud concerns, compliance concerns, and I would add the currency complexity. And currency complexity we've been living in the last few months. And so at the end, the payment is not just the word payment, it's a beautiful word, but you have the front experience of clients, corporates, and small business individuals, the payment rails, which have been evolving and investing heavily, and then the regulation and the country and the currency aspects, which make the payment mix a bit even more spicy. Yeah.
All right. Thank you, Bruno. And I think, Arlene, we're having questions in this group, right? Okay. So by the way, if you have a question, you can go to submit that. So let me ask each of you, based from your institution, what is a major payment initiative that you're working on today? I'll do the same thing. We'll go this direction. All right.
Real-time payments, encompassing the rail, the infrastructure to support speed and capacity. That's one. We're constantly working on client experience, irrespective of the rail, and then compliance, which I think all of us in the room know that an enormous amount of anything we do has to be compliant, and the expense goes with that. So I think it's those 3 buckets, and then all that leads to central bank digital currency, certainly in speed and settlement, but we'll get to that later. So I think for the near term, it's those 3 things.
All right. I think some of them will resonate, but I'll add a few. So infrastructure enhancements. I think optionality to run different kinds of payments, reach different kinds of markets, reach different kinds of tokenized methods of making payments. I think one of the biggest focus we have is to bring our infra up It services to, so you have a very good title, relinquish the past, adapt to the future. That's what the title of the conference is. So we need to get rid of the past infra, build the infra for the tomorrow, and adapt it for what may come. So one of the biggest things I do is build infra and the optionality in infra. Governance, I think the focus on governance for me is to how do I find a way to reduce the cost of governance, right? Because I have this famous quote from Lotus F1, that they don't have an F1 team anymore, but Lotus, they were asked, what do you do to make the car go faster? They say, we add lightness. So how do I take cost out of the payment? How do I make payment lighter to make it go faster? So that's the second area.
That's always been an issue. I mean, this governance thing, we act like we want to have as much governance as possible, but there's a cost with all of that, right? So you have to figure out where the balance is.
That's the trick, and data. The last thing is, right. So if I really want to go to a freemium model in payments, where do I make money? So how do I homogenize data? How do I make sure ISO is adapted from back to front and not just a lipstick on a pig between banks? So that's the three things I would focus on.
So how do you make money?
That's the question.
All right, Bruno, how about you?
Yeah, to complement my colleagues, I agree. The question is what's the share of efforts and investments we spend on these areas? And I think we banks and financial institutions and many players in the payments, we don't have a choice about compliance or regulation. We have to do it. It's not optional. On the investment in the rails and the payment rails, central banks are as well leading the charge to move into this XML migration, which is happening right now, and which will, to compare it to something that speaks to people maybe less on the rails, it's like the 5G. You have to invest everywhere to keep higher bandwidth, more richness. But that 5G will only be useful if you go to the client-facing side, and that needs investments. And the problem is to have to do all these three investments at once. If you focus only on the compliance or on the rails, you will be losing out on the customer side, small business, individuals, or corporates. If you don't do compliance, you will get fined. So at the end is, how do we actually balance investments across the full rate? And honestly, I think most of the banks and banks that are in the audience, we probably are facing the same challenge. Ask how to invest everywhere at the same time, not to lose out, and at the same time do what we have to do and what we have been good at doing in the past few years. And that is happening right now. I think we're at the height of the investment curve, and maybe still continues for a few years.
If I could just come back to it. So everything that the three of us said, everybody in the room is doing.
Yeah.
And everything's the hardest, but I do think that amongst the hardest at the top list is relinquishing the past. When we retire a system, we have a party. And I bet you guys do the same thing. And in the US, at least, when are we ever going to stop using checks? So I think relinquishing the past. Now, fortunately, one of the tiny bright spots of the pandemic is people stopped writing as many checks, okay, at least in the US, right? But they haven't stopped entirely. And we've actually seen, people hold on to it for dear life. So relinquishing the past is really a challenge. It really is.
Important.
And sorry, and it's the last mile, which is the hardest, if I may add. I have the same problem in Europe. It's checks may be going down, but it's the last 10% that are the hardest to get off the...
Exactly. And so you get rid of the last 10%, you're not closing down an operation, you're not closing down a system, you're not actually relinquishing the past. That's a real problem.
Which has a cost to it.
Yes. Not just compliance, but there's a cost of maintaining infra.
Yeah.
Okay, so I asked your initiative. I'm going to say that it goes around the same way, and maybe I'll start with you, Bruno. But Bruno, you kind of brought it up. What the challenge is? What is given those initiatives? What is the biggest challenge then? Is it relinquishing the past, or is it what would you say your biggest challenge is in Europe?
No, I think the biggest challenge is to stay close to our customers and to follow our customers' needs. I think that's really if we lose that, there's no point for our existence. So to do that, what we have to see is the transformation on the client side as well, to follow that, not to lose track of that. I want to just to bring one topic which for me drives a lot of my attention today, which is the evolution of how our clients in the B2B space are selling goods, where after the pandemic, you've actually revolutionized how you buy. And actually now purchasing departments are preferring to buy online, even B2B, as opposed to have in person. Some recent studies by some known companies have shown that even the ability to pay for 500,000 K on an online purchase, B2B, recurrent, I know what I want, I know the company, it's a matter of today. But try to do online payments, B2B, high amount, the same way that you experience that buying your shoes over the weekend for having them the next day. It's not the same experience. So the key challenge, I think, for us now is to figure out how to do B2B payments, which have many roles: procurement, marketing, treasury, how to render that experience as perfect and lower cost, speed, transparency as possible, making use of all these beautiful rails that we're building together in the industry, all while being regulated and compliant, of course. So I think that's the biggest challenge in my perspective.
All right. How about
reverse order?
Reverse order, okay. I think I agree with Bruno. So again, you'll see a lot of us agreeing with each other. That's not group thing though, but it's just what it is. I would think I want to just go a little up on this, right? I said payments is the most collaborative problem for us to solve of our time. So how do we do that? So I think that is the biggest challenge. How do we operate a closed loop experience, like Bruno said, experiences our clients get, right? You get a better experience on Zelle than you get in banking. How do I replicate that closed loop experience of Zelle in an open loop system where money moves from Bruno's bank to my bank to Dave's bank? How do I do that? How do I, in an open loop system, create an experience that you feel like you are operating in a closed loop environment? That, I think, brings out the collaboration need, the data harmonization need, the cost of compliance need, and the fact that we want to solve for the global payment ecosystem.
Yeah. The only thing I could add to all of that is that those client expectations that Bruno articulated first and Shirish second vary greatly.
Correct.
So we think that, I use rough numbers, we think that the form of payments that we're going to provide will roughly double in the next X years. And it's not a secret, right? You know all these things. It's push to debit cards, it's real-time payments, potentially sort of bank digital currencies. Whatever we all have for wire and ACH is going to go up by some factor, whether it's double, triple, whatever. So we have clients, I'm sure, who say the opposite things. One client will say, I'd like to pay you one price for instant payments and one price for next day.
Good.
On the other hand, you have clients that still want the optionality and the specificity and the transparency into individual payment types and don't mind seeing a menu of 200-300 payments, each with individual costs. So that's just in terms of pricing, which is in the scheme of things pretty easy. Then you got what Shirish is saying, the experience. So how do you bring that to bear, given that wide range of user expectations, right? And I could just go on and on. So for global banks and even for banks mid-size or whatever, we all have a wide range of clients that have entirely different expectations. And it's really a challenge in terms of the investment in the experience.
Absolutely.
Okay, so follow up to that. Who is going to own this global experience? I mean, this customer experience. Is it going to be banks? Okay. Or is it going to be big tech?
Mm-hmm.
Is it going to be fintech? Or is it going to be governments?
We all work for banks. There's really only one answer.
No, but I don't know if there's an answer, but I'm just saying, where's the ownership going to go?
It's a very thoughtful question. It will stay with the customer.
It will stay with the customer. Okay. The ownership will be the customer.
That's a good answer.
That is a good answer.
That's a good answer.
Bruno, what do you think?
Well, I think that each customer case is different, and what I think our role as a bank, and that's more to look in the forecast, is that I think as payments get richer and as well more options are available, the key role for us is to orchestrate that experience, is to say, okay, that's a better payment experience than that one, and here is the choice. And by the way, because we know you, we will do that same choice for you so that you have to focus on your business. Go sell, go buy the best price. Don't worry about whether I use that payment or that payment. We know your conditions and this is how you do it. I think that's going to happen, and we will need partners for that. I think it's fair to say that the speed at which this has to develop and to be relevant, we have to partner, and we are all partnering at the same time. But even that partnership has to be very well fine-tuned to keep security, keep fraud prevention, keep sustainability, all those elements that are important to be a sustainable bank. At the end, it's sustainable for us, our partners, our clients, the clients of our clients. So make sure that full chain is well engineered. And I think banks have a key role to play in that area.
All right, thank you. Okay.
I will say this. In a world where there's more payment forms, and each payment form, for better or worse, has its own individual rules. And we're going to talk about this, obviously, the three of us.
We're going to come in, we're going to jump into that
Right.
Go ahead.
If we don't, as an industry, collaborate on consistency, harmonization, simplification of those rules, you're just begging for somebody to come in on top of it all, fintech or otherwise, and solve it for the clients.
Correct.
So the industry is either going to push for harmonization as groups here, through SWIFT, through other groups, for some consistency so that we don't all make our back offices into, unfortunate complexity, and then improve for the clients, or somebody's going to come in over the top of it, which, by the way, we already see in certain ways.
Okay, that's a very interesting. So if we don't take responsibility for it, someone else is going to do it. And if we don't collaborate, that's what you're saying. If we don't collaborate, then we're going to miss out, right?
Right.
I mean, we were just right before Shirish, we were having breakfast, and Shirish, you said, what I really like about BAFT is that membership is not only banks, but it is also fintechs. It's also these partners that we need to collaborate with, right? And we had the Global Payments Industry Council that all of you are members of, the three of you are members of this council, and you're the chair of that, Dave. And that was established in 2020. And I'm looking to Barry over here, and I'm also looking to Todd, and Samantha Pelosi was here over payments at the time. It was just developed, it was just organized in 2020, right? We always had the global GTIC, the Trade Industry Council, and BAFT was kind of known as a trade organization. But that's why this whole issue about payments seems to be an area we had to focus on. So we established GPIC. So tell me a little bit about GPIC, okay? What you're doing in GPIC, and what are some of the main goals and responsibilities you have now?
So we did start it a couple of years ago. Deepa now stepped in for Samantha Pelosi on day one, started getting her hands dirty, which I appreciate. And really everybody on it has taken a role. Like I admit, and I bet we all feel the same way, I've been part of things where you show up for the meeting, you leave. Everybody on GPIC has done some work. And the work is how I was alluding to earlier, we're writing a model code. And so let me tell you what we're not addressing and then what we are addressing. So we're not addressing technology, and we're not necessarily addressing interoperability, and we're not addressing a bunch of other things. What we are addressing is disparities in regulation. And so specifically, we're writing, as Todd said earlier, we're writing a model code. And if you're familiar in the US with the Model Uniform Commercial Code, which is pushed out and with the hopes that the individual states adopt it, or the FX model code, which has to do with market practice, it's that same spirit. And it's going to be a document that's in process right now that will address the aspiration that there's more consistency in regulation. So we will hand this thing, I'll say what's in it in a second, we're going to hand this thing to scheme operators and central banks and others with the idea of lifting standards, not lowering them. Let me be very clear about that. And so now you get into the content and the why. So there are really several areas that we're addressing. One is, I think we all know that there's differences in KYC. And the compliance is mainly about knowing the customer, not the transaction, at least in today's world, perhaps different later. And yet, at least in the US, there's differences in the expectations of know your customer across banks, non-banks, and others.
Correct.
And also true globally. Okay. Another is, and so the consequence of that is that once payments come through, you're either supporting somebody else's activity, like we have non-banks as clients, we're very happy to do that. And possibly with different outcomes in terms of fraud and other financial crimes. So I think we all know that, but I'll just say it. Another is scheme participation. So if you have two participants, not two banks, but bank and non-bank, each coming to the table with different capital structures, and yet there's mutualization of loss, that's not really fair, for lack of a better way of saying it, that one might have a different loss propensity than the other. And then there are other aspects to this. And so we expect some debate, we do, between banks, non-banks, and whomever else, financial inclusion advocates, things like that. But nonetheless, we do think that there's merit in all of us. And I look around the room, so many of us do business together, and yet we know that the traffic that we send each other isn't always consistent. It's never going to be perfect, but today it's decidedly, almost purposefully imperfect by design. And so we hope to see something that's more consistent so that there is more, so that we compete on things we want to compete on, that we compete on client experience, we compete on our appetite for investment. We compete on the quality of our salespeople, and we don't have disparities in things that we really shouldn't, which is largely due to with compliance, just to be honest about it. And so that's what we're trying to do. And Bruno and Shirish have both contributed as well. Bruno, what would you add to what I said?
No, that's correct. That it's the collaboration that I think it's key, is that it allows us to discuss these things and compare how we are looking at the situation between in the economy, in the banks. It actually helps to have this forum to look at what we have to do better for the society, for the payments world. If we don't have these forums, in fact, there's very little that each one of us individually can do. You need to have these places to build that kind of a paper and that kind of a position that allows to increase as well understanding, awareness, and then help to get to a new standard, as Dave's saying, is to increase the standards, not to decrease standards. But so I'm quite supportive, and I think there's a lot of a mix as well of European, Asian, US banks. That's really great, and non-banks as well. So that's it's one of the few forums that exist that allows us to talk about the true issues at hand. And when we will see about CDBCs and all things, I think we will end up having to take that topic as well in those kind of organized forums.
I think nothing more to add to an extent, but I wanted to tell you what it means to harmonize the uneven regulation that we're trying to do in GPIC. Right? Think about a road that everybody rides on. You don't have different rules for cars that are blue and different rules for cars that are red, or cars for the same rules. That's the kind of things you're trying to do. You using the infra, use it equally responsibly. Right? That's the obligation. If you use the infra that all of us and our shareholders have built, if you cannot have a different view of how to use, or I'm not going to use misuse, but how to opportunistically use the infra to suit just your needs, and you forget everything else and all other people on the road. You cannot cross the red light and everybody stops at red light. That's the point you're trying to do.
The most obvious example. So first of all, there are going to be more people, more companies making payments.
Correct.
For sure. We welcome the competition, for sure. But the most obvious example is fraud. Nobody wants fraud.
True.
And if we don't have a more consistent, and I would contend a higher standard for KYC amongst participants old and new, I wouldn't say you're inviting fraud, but you're certainly creating forum shopping for bad actors, right? They will seek the weak point in the chain. They do already. And nobody likes fraud. Nobody wants fraud. So that's just an obvious example.
Yeah. Okay, to Shirish's your point, though, I remember 1977, my family we went to Europe for the very first time. There's 9 of us, big family, and there's 9 of us. We're driving, I'm in the Volkswagen bus on the Autobahn in Germany. Why those, and I'm in the far left lane, why are all those really nice BMWs flashing their lights at me all the time? I realized I had to move over. And there is maybe different rails, right? One's a fast rail and one's a slow rail. Get out of the way. Formula One racing, right? There you go. Okay, now, because I don't know, we have to talk about CBDC. Okay, CBDC was on the list of the initiatives for BAFT for this year. And in our global annual meeting 3 weeks ago in Washington, D.C., where we celebrated our 100th anniversary of BAFT, we had Rob Nichols, the CEO of the ABA, speak and interviewing Kathy Besant from Bank of America, who's Vice Chair of Strategy. And the question he asked Kathy, and he also expressed his opinion about CBDC, particularly as it relates to the United States, the jurisdiction of the United States. And he said, quote, "I do not see a use case for CBDC." He said the arguments for that have been inclusion, which he says in the United States, banking is about 93% inclusion. Maybe Ireland's back to that again, but inclusion is one, and that's not a real challenge for that. And the other thing is that our currency isn't digital enough. And going back to even in Venezuela, it's all digital, right? So it's not. So he said, I don't see a use case for it. And Kathy said she agreed with that. Now you're with Bank of America, so I want to know what you have to you have to represent your bank. I understand that. Now I'm going to talk about. I understand Singapore. I really want your perspective. Singapore. Then I want to talk about Europe, because Europe I think lots of discussion about CBDC comes out of Europe, and we've had lots here at BAFT, a lot of discussions about. Seems like they're kind of a driver. So let's go around the room on that one, okay?
Okay.
And kind of responding to what Mr. Nichols and Kathy said.
So I agree with Kathy.
Okay, yeah.
Got that. And I think that, just snap your fingers, say there was a U.S. central bank digital currency tomorrow. I think that the average consumer would not necessarily appreciate the fact that if it existed and there was account to account between Mark and myself, and if it's interoperable, Shirish and I, whatever, and Mark was selling me something that I wouldn't have probably the chargeback capability that I have today with Visa and MasterCard, or if it was a direct debit, I wouldn't have the Reg E protections that I have today. So I think there's a whole host of things that go unappreciated with the novelty and the attraction of digital currency. And I'm not talking about Bitcoin, not talking about that at all. I'm just talking about if there was something government that looked legitimate, not that others aren't, but if it looked like it had the backing of the federal government, that you might be attracted to it. But I think that it would not necessarily, and there's all sorts of details to be ironed out, come with the protections that the consumers enjoy in the US. That's why I agree with Kathy, like no joke. There is a separate body of discussion about wholesale, settling wholesale transactions with digital currency. But before we go there, I'll invite Shirish or Bruno to contribute.
Okay, so I'll go first. So first, I don't work for Bank of America.
Uh-oh.
No, I think I want to answer this question slightly differently. I think, do I think, or does the Standard Bank think that digital currencies are here to stay? The answer is yes. Now, CBDCs is a one avatar of digital currencies. Where regulators are doing it in the markets that we call home in Standard Chartered Bank, the regulators pushing out digital currencies as experiments or as actual commercial live projects. Nigeria, there is China, there is India coming up, South Africa is testing. In the 40-odd markets that we call home, at least 20 of them are having some experience of CBDC or other. And I'm writing papers and I'm helping the government to understand what. So I think there is digital currencies are here to stay, and their impact on payments is irreversible. That's one. But to the point of what Kathy said, the use case is not clear. And I think the use case drives commerce and not the other way around. Mm-hmm. So I don't want to buy the hammer first. I want to find the nail. And that's my answer to that question. Now, what is the nail I'm going for? Then I'll get either is it a nail or is it a screw? Then I need a hammer or a screwdriver. I need to find out that first. Right. And finally, to the fact of wholesale bank digital currency, I think some part of it exists, but it is what we are not changing the way we pay. We're changing the way we store money. With the way we change, we pay may not change, but with digital currency, the way we store money changes. You're actually making money smarter. You can program it. You can switch it around on the end of a contract. And instead of triggering the payments become invisible, so the money itself decides, okay, now I have to leave Dave's pocket and come to Shirish's pocket because the FX contract is due. That portion I get, but it's still a little water away from becoming a reality. That's just me.
Bruno.
Yeah, so on digital assets in general, before going to CDBC, I think the question always is, first for us is, what is the underlying financial product we're trying to sell or to use? And is this product regulated? So if we talk about CDBCs, you can imagine this is well regulated at that point. And then what is the quality of the issuer? Who is issuing that digital asset? If it's the CDBC, it's a central bank, it's really high quality. So these two elements make it from that perspective, an interesting use case or an interesting asset. Nevertheless, all the experiments in Europe for which we've been discussing with the regulators or with the central banks tend to first go to the asset class of securities. And that makes sense because securities is an asset, is regulated, you know, the issuer is high quality, you are producing digital assets that then need to be traded against something. And that something may be a payment. And then the question becomes, in the use case is, okay, how do we actually enable the payment before, together with an asset exchange? And that's where I think the attention is how do we do delivery against payment? That's I think, the key topic. And even though 80% of regulators, and there's some statistics, are today piloting, exploring CDBCs, I've only seen two extremes of the coin, which is very disturbing, is either we're looking at nano payments, how do I replace cash, how do I replace coins? to tell you, in Belgium last week, I did not have a chance to find coins of 5 cents and 10 cents. So it's true that coins, small payments, are a problem. There's no more coins in the market. So nano payments is one extreme of the use cases. So to do CDBCs for nano payments is one. On the other extreme, you have CLS payments of 8 billion between two currencies. That's the other use case. I find it interesting, and I just shared that with the crowd, that in fact, in the main two use cases that I see are, the two extremes of the of the value of a transaction. And both have to become more mature to know that what's the value in it. But the key question, and I'll leave it with David to give him back, is at the end, what's not being dealt in, and to go back to cars, is that a lot of the private companies and experiments on digital assets were looking at the engine, the CDBC clearing, without looking at what road we're driving in, what speed, how big is the car. We're looking at the engines. The rest of the car is the roles that exist today on opening those accounts, KYC, the regulation. Why do we have correspondent banking relationships in some cases? Why not? All these, let's say, surrounding of a CDBC, I haven't found a central bank figuring out how that's going to be happening when it's the central bank which is issuing the CDBCs. That's still a model that needs to be built. It does not exist. And that's a key question that I think we can leave it there, is will the commercial banks play a role? Okay, but then what role do they have on the CDBC? Or will the central banks have a role? And do they know that each bank spends between 500 million and 1 billion to cover those areas of compliance? So those are the key questions to me that remain to be seen. I think we still have a road ahead for the payment CDBC to be defined as a model. But anyways, it's a very interesting discussion, very intellectually challenging. And I think we need to keep that collaboration between banks and regulators and third parties to come up with a better model.
And it's probably not resolvable even in 10 years from now, right? Right?
We'll see.
Okay, we have 1 minute left. So I have one last question, and it's going to only go to Bruno. Bruno, because it's something I get questioned a lot, and I'm just going to ask you because you're in Europe. Have there been any effects on the payment rails or the schemes or whatever because of the Ukrainian-Russian conflict? What's the discussion there in Europe? And what do you think?
No, the point is payments and rails, they're there to stay. What's changing is the policy, the decisions from central banks or decisions from governments. And so indeed, payments are in a way hijacked in a way by the policy decisions that are coming from all sides, US, UK, Europe, or Russia. And up to this day, for example, today, new central bank of Russia elements, we have to understand, what do they mean for payments? What do they mean for our customers? And here I have to say that it's a great show of collaboration between banks to figure out, okay, that's what it's written by the central bank. What do they mean? And so at the end, it all impacts payments, but it's not payments themselves. It's the actual policy that ends up leading to a payment decision. Can we do that payment? Can we not do that payment? And here, I think the banking community has pulled themselves very well to try to figure it out. And I think the clients appreciate the transparency to figure out, look, that we know, that we still don't know, let's be careful. So yes, payments have been affected. I think there will be some lessons learned from this, but this is still not over. So I think we have an interest to keep anticipating geopolitical issues for our clients. And I think banks have a role to play to clarify things when things are not clear from a central government or a central bank. I don't know if that answers to your question, but we're not over yet. It's not over yet. Okay,
thank you, Bruno. And just overall, Bruno, David, and Shirish, I want to thank you for your participation in this program. It's really wonderful for me to talk, and I could talk to you guys forever. And also thanks for your dedication and your effort on GPIC. I think GPIC has been a wonderful addition to BAFT. It says that payment's really important to BAFT, and I appreciate your leadership there. Thank you very much.
Thank you.
Thank you.